In this video, we will explain how to include the depreciation expense in your projections. Here we have fixed expenses, variable expenses, and then operating profits. This depreciation is an expense, so it should be before the operating profit. And this depreciation is basically one expense that you estimate. So whenever these assets, the furniture and plant and equipment, this 100 million, is no longer able to work, or this technology is no longer usable for your company, you have this money, this depreciation expense that you consider in your accounting there in the company, available in any form of assets. It could be there in your bank account. So once these, let's say 5 years end up, you have money enough put away in your bank account so you can buy back new fixture, furniture, plant and equipment, so your company stays ahead. All right, so this is basically what you mean by depreciation. You put this money away. You don't pay this money to anyone. Fixed expenses, you pay this money to in terms of salaries, in terms of expenses on, let's say, cleaning expenses, for example, or rent. So you pay that money to someone else. And variable expenses, again, you pay that money to someone else. So that money goes out of the company. Depreciation doesn't. You account for an expense, but actually that money should be in the company. So it's actually a source of cash flow, income cash flow. So here I will type depreciation expense. I include a row here. And it would be equal to the addition of our furniture fixed plus our plant investment fixed. I got this fixed because it will be the same for the first 5 years times my depreciation rate, again fixed with F4 in my keyboard. So it's actually 20 million pesos. It stays the same by all the years. But actually, here I need to make a change, because operating profit as right now is equal to gross profit minus fixed expenses minus variable expenses, but we are missing our depreciation, minus depreciation. And I should not forget to drag it to the right. So now my profit before tax is diminished by my depreciation expense. I also could include my tax expenses, which I will include some rows here. So taxes payment is only happens if you have profits right here. So we should make an if formula in order to perform that. And we also need a tax rate. Let's type here a 30% tax rate on income, right? And so we got, whenever we make a profit here, we should pay 30% over that before tax profit income. So the if formula goes as this: if, so the logic, it should be this number greater than 0. Whenever this number is greater than 0, we will multiply this number times our tax rate, which should be fixed F40. If not, we pay no tax at all. Actually, in reality, some tax agencies will charge a basic tax payment on income, even if the company make a loss. But for our basic model, we will consider that there's no payment. So here we should be paying 22 million pesos on taxes whenever we make this 75 million on profit. Let's type here some sales of, let's say, 2,000 units, which should probably give us a loss. Actually, yeah, there is a loss. So we make no tax payments at all. Let's not forget to drag it to the right, and let's go back to our initial 10,000 unit sales. All right, so now we are able to perform our net profit, which is very simple. Is our before taxes minus our tax payment. So this would be our net profit, right? So thank you for watching.